Ladies and gentlemen, please stand by. We're about to begin. Good day and welcome to this New York & Company third quarter 2014 earnings conference call. Today's conference is being recorded. At this time, I would like to turn the conference over to Miss Allison McQuarrie of ICR. Please go ahead, ma'am.
Thank you. Good afternoon. Before we begin, I would like to remind you that some of the comments made on today's call, either as part of our prepared remarks or in response to your questions, may contain forward-looking statements that are made pursuant to the Safe Harbor provision in the Private Securities and Litigation Reform Act of 1995. Actual results may differ from those projected in such forward-looking statements. Such forward-looking statements are subject to risks and uncertainties as described in the company's documents filed with the SEC, including the company's fiscal year 2013 Form 10-K. I will now turn the call over to Greg Scott, Chief Executive Officer.
Thank you, Allison, and good afternoon, everyone. With me on the call today is John Worthington, our President and COO, and Sheamus Toal, our Executive Vice President and Chief Financial Officer. While our third quarter results were slightly improved from our revised expectations, it was nonetheless a challenging quarter as our results missed the expectations we set at the start of the period. Our top and bottom line results were impacted by late merchandise deliveries due to shipping delays at West Coast ports, longer lead times, and increased cost of goods diverted to the East Coast as part of our contingency plans and increased air freight to secure critical goods. In addition, we were also impacted by poor product acceptance in our wear-to-work collections from a fashion perspective as compared to the prior year. While wear-to-work is an important category in the third quarter, it becomes less important in the fourth quarter as we shift into a more gift-giving assortment for the holiday season. In total, for the third quarter, net sales were $210 million compared to $217 million in the prior year. Comp store sales declined 3.4%, following the 3% increase in the prior year quarter. Operating loss, adjusted to exclude our headquarter relocation, consulting, and certain severance costs, was $6.7 million. This compares to an adjusted net loss of $3.1 million last year. There were several positives in the quarter that reinforce our belief that we have identified and are implementing the right strategies to increase sales productivity and long-term profitability at New York & Company. One, we experienced positive trends in important metrics. Traffic trends were favorable during the quarter and improved over the trend experienced in recent quarters. We believe this improvement validates that our brand is strong with our target demographic and that New York & Company is a key shopping destination for consumers. That said, our UPTs were lower than planned given our delivery issues, which resulted in lower ADF and contributed to our sales shortfall. Number two, we advanced our omni-channel goals. Over the past years, we have focused our resources on creating a more dynamic business model for New York & Company. Understanding that the retail landscape has changed significantly and continues to evolve. This model gives us omni-channel capabilities to best serve our customer no matter where she shops, along with a keen focus on our growth businesses, e-commerce and outlet. John Worthington, our newly appointed President and COO, who is on the call with us today, will provide further details on the progress of our omni-channel initiative following my remarks, and we believe this represents a significant opportunity for future growth. In terms of consolidated sales, while the comp store sales trends were negatively impacted by delivery delays within our fashion assortment, the negative trend did improve later in the quarter as inventory levels improved. From a merchandise perspective, we saw positive comps in our downtown business, driven by strong product acceptance in casual sweaters, downtown tops, dresses, and the Eva Mendes collection, even as we anniversary the Eva launch from the prior year. Turning to the channels of our business, our growth businesses, e-commerce and outlet, continue to represent an increasing portion of our total business, and we continue to believe they will enable us to increase productivity and profitability long term. During the quarter, our e-commerce channel delivered a double-digit increase in sales. Contributing to this result was a strong performance in e-com exclusives, driven by strength in pants, denim, and dresses. We continue to experience an increase in conversion throughout the quarter, driven by improvements across both mobile devices and desktop. We implemented new ways to bring customers to the site, along with new promotions to drive improvement in UPT and ADS. In the quarter, we added functionality and visual enhancements to our site to increase conversion and drive our e-commerce performance in the fourth quarter and beyond. We continue to see strength in conversion over the prior year in both desktop and mobile. Turning to the outlet business, this channel continues to be highly productive for us despite challenging traffic trends during the quarter. We continue to be successful with outlet-exclusive product, which carries a higher margin and strongly differentiates this channel from both our New York & Company stores as well as our e-commerce business. Outlet exclusives grew to over 80% of total sales, up from 70% in the last year's third quarter. During the quarter, we opened 5 new outlet stores and ended the period with 62 locations. We continue to see an opportunity for approximately 100 New York & Company outlet locations. Within our core New York & Company stores, we were pleased to see traffic levels approximately flat to the year-ago period, which is an improvement versus our recent quarterly trends as our market initiatives began to gain traction. Additionally, over the past several years, we have also focused on closing underproductive locations and downsizing existing locations to improve profitability. While these store closures have negatively impacted sales, the majority of these closures are now behind us. As we move forward with a more stable fleet, we believe that the continuation of our strategy of downsizing and remodeling existing locations will drive improvement in sales, productivity, and profitability. As we move into the fourth quarter and holiday season, our comp store sales results for November improved from the trend experienced in the third quarter. And while we expect the environment to remain challenging, which is reflected in our guidance, we remain focused on the opportunities we have identified to drive sales and margin. We remain focused on driving sales during the holidays and peak traffic times. To capitalize on the holiday season, we have several compelling events in place. Our overall theme for the holiday is focused on holiday giving, gifts, glamour, and more. First, we launched the holiday period in November week 3 with our pre-Black Friday promotions to capture early sales in the quarter. This was followed by our Black Friday deal strategy as we look to capitalize on peak traffic with compelling deals to drive transactions and increase conversion. Black Friday focused on key gifts that our customer comes to expect from New York & Company for herself and for giving. Cyber Monday successfully started this past Sunday and continued into Monday. We were pleased with our Cyber Monday results during the period. Moving out of Black Friday and Cyber Monday, we focus on glamour both for the holidays and for gifting. In early December, we delivered an exciting new fashion book, which included New York & Company product and the Eva Mendes holiday collection. This book focuses on our 10 most irresistible gifts for the holiday, along with getting ready for the holiday, focused on the glamour of the Eva Mendes collection. The second Saturday of December, we focus on giving back to others. On Saturday, December 13th, we will match our customers' contributions to the St. Jude organization. Through the very generous donations of our customers and employees, we have raised over $13 million for St. Jude over the past 7 years. Finally, we wrap up with our 12 Days of Wishing and Giving, which is our gifting promotion, and we believe this will enable us to capitalize on the final days of the Christmas season as our customer moves into a strong gifting focus. Leveraging our partnership with Eva Mendes is a cornerstone of our strategy throughout the holiday season and across many of our events. We already see how this collaboration is driving conversion with a strong ADS while attracting new customers to our brand. In November week 1 and December week 1, we introduced new Eva Mendes collections in our stores and online, which provides continued freshness to our offerings and a reason for our customers to shop again. The Eva Mendes collection is a significant focal point of our gifting strategy for holiday. We believe that the Eva Mendes sub-brand continues to represent strong opportunities for future growth, and we continue to see strong reaction to the collection. We are currently planning to launch a small collection of bridesmaid dresses for January on e-com and in 2 locations, and we will introduce shoes for our March collection. We are excited about this partnership and are thrilled with having Eva Mendes as a partner. Catch Eva today on The Ellen Show. While we started November with continuing delivery issues caused by the West Coast port delays, which carried on throughout the month of November and into Black Friday, we believe that we are well positioned as we enter December, as many of our late deliveries from October and November have begun to hit our stores. We believe that we will continue to see strength in our sweater and accessory business